Hey guys, so as you know, a good analysis and a good setup starts on the higher time frame. In this case, I'm going to walk you through the daily time frame, what I was looking for today, what were some of my confirmations to take the position that I took. I actually caught a short this morning around 9:40 or 9:41 a.m. and I want to walk you through it, and maybe we can get an idea of what to expect in the morning. Okay guys, so on this daily time frame, the first thing that I'm going to do is pull that fib out because I want to stress the importance of premium and discount. And so just going to measure that up for you really quickly. I know I talk about premium and discount a lot. It's because I use it a lot. Alrighty, so we have that premium area, we have that discount area. And as you can see, Friday we tapped into discount. And you know, we kind of was like, okay, are we looking for bullish setups? Are we looking for bearish setups? What did we leave behind, right? Like, what is it that we're going to be looking for? And so we had that previous week's low right down here, and just hopping around really quickly. And so we had a few areas of interest. We had one right down here, and we had imbalance. As you know, imbalance is when we have a gap in front and behind the candle. There are no wicks or bodies there. So that is considered imbalance. And the candle beneath it is as well. And right beneath it, at the swing low, I have another area of interest. Now on this daily time frame, this area in the middle is internal, and this area near the swing low is external. So near the swing lows and the swing highs is externals. Those are like more high probable setups. Price could be completely floating in the middle of the swing high and the swing low, and those are risky setups, right? Because at any point price could go up above or beneath wherever you entered. And so enough with the daily time frame, because you can't get an entry on the daily time frame. So what I found that stood out to me today was the 30-minute time frame. Now, excuse me, when I was marking out my 30-minute time frame, and I'm gonna see if I can push the time back. When I was marking out my 30-minute time frame, of course, we had not been accumulating, but when we opened and I did take a look at price, we were somewhere around here. And the first thing that I noticed is that we had a gap, and I talked to you guys about the gaps quite a few times. We treat the gaps like imbalance. It's like oops, I forgot something. We expect price to return to this area. So now, even if I had a bullish objective, I am now looking for price to come back down to this area. So if price gets to this area or beneath this area before my trading session, I may look for a buy. If price does not reach this area and I can get a break and retest, then I'm going to continue to sell down. The objective will be this gap and possibly beneath it, possibly targeting the previous week's low. And so, you know, of course, if I'm going to sell, I want to get in at a premium price. So I'm already analyzing the highs that have been left behind. Maybe people in London session caught the first sells. And so, you know, if I'm targeting anyone, it's going to be the people who sold before me. So the first thing that I do is I look for an area above price action that I could hopefully get an opportunity. You know, the higher price is, the more money you walk away with. And this is possibly what I was looking for as price started to develop, that maybe we would use this internal area here beneath this imbalance, and price will respect it, continue higher. It would probably make people want to start buying, but I will get my opportunity. Well, guys, sometimes expectations or overly expecting something leads to disappointment because it didn't happen like that. But it's a good thing that I always prepare myself for scenarios. And so, guys, this internal area was not an area that I was looking for to buy. I just wanted price to respect it and you know, climb up to this area. But I seen as price continued to develop after 9 that it continued to break structure to the downside. And remember, we tapped into that discount, but we just kind of left a little wick. And I was like, okay, I may be taking a short and not a buy because, we still haven't reached that lower level as of yet. And so I found myself on that 5-minute time frame, just watching structure. Now, how do you know if price is going to retrace back to your area at the open if price has already been breaking structure to the downside? Now, guys, unless there is like a major news event and we get to an area of interest, let's just say, for example, like this one, where we come into this area here, price is respecting it, and then we have like NFP or something, or CPI, you probably see something like this. Price just shoots up and taps this area, and then we'll get like that retracement down. But in this case, there was no news today, and so I was like, okay, price tapped this area. I'm no longer expecting price to climb all the way back there. That's a long way up. That's about a good 183 points. I don't think it's going to do that. I'm going to take off the bullish areas, and it's time for me to start looking to short US30 possibly after the New York Open. So, have to learn how to change your analysis or be open to different possibilities if you want an opportunity. Holding tight to your bias is not going to do anything for you. The only thing that is going to cause you is financial loss and disappointment. Quit the bias. If I was totally bullish this morning, and at 9:30 a.m. I wanted to buy, and I bought at 9:30 because I felt like my bias was so correct, guys, I would have probably blown an account. So the best thing that you can do is actually analyze what price is doing. So now at this point, guys, I'm like, okay, where could I possibly start looking to take some opportunity? So I'm looking at this area. Price is continuing to break structure. I'm like, okay, cool. Now you have the decision. If you get an area of interest and it's open and it's before the trading session, you may take it. If you're following structure, if your confirmations meet, you may take the opportunity. You don't have to necessarily wait for 9:30 a.m. Right? So I'm like, okay, looking for areas of buy side liquidity that maybe price will come back and sweep. So price comes, let's check that out in 1 minute. So price comes back to that area right here. So that area is done, right? At this point it's 9:29. Okay, I'm at this point, I'm looking at it. It's a minute before the open, and I remember saying to myself, price didn't really leave anything behind for me. Besides this little imbalance up here. So let's see what I get. If price is, if it broke structure at this point right here, here's that little break of structure. If it broke structure at this point, and it retested back to this area, filling in that imbalance, I'd be okay with taking that down. But price doesn't always do what you want it to do. So as price is continuing to move, what I'm doing is I'm highlighting where people may have taken sell positions, because I might be able to target them. Okay, so let's check it out. Price continues to move, and it comes up above those people. It comes right back into this area, as you can see right here, guys, and that's that 9:32 candle, but I did not take the position. And you might say to yourself, well, you called it, you seen it, why didn't you take the position? Because, guys, sometimes I like to just see what price really wants to do. Sometimes I want like a clear as day open invitation in the market, and if it could retest one more time for me just to solidify, it's already taken out buy side liquidity. If it can break this structure and give me something that I could retest and enter, I'd be 100% okay with taking this trade. So let's play. Okay, so now price is just moving, guys. It broke structure yet again. It broke structure yet again. And now I have something to work with. Am I afraid of being stopped out of this trade when I get in? Absolutely not. I'm not afraid of being stopped out of this trade when I get in. I'm 100% confident. And what I want to see here is that price taps into this area. Once it taps into this area, I'm going to take it to the gap, possibly beneath the gap. Once price gets to an area of interest that you kind of called out, you want to start trailing that stop loss, guys. Don't get too greedy. You don't have to quit the trade just because it goes to your area. If you feel in your heart that it's going to go lower or higher, just start to trail the stop loss. And if you don't have a broker where you can just like easily trail the stop loss, you can manually do it. And by the way, guys, if you click the link in my description, you guys can sign up with my broker, Henko Trade, and get a 200% bonus. Use it as leverage. Use it to grow and build your trading account. I had someone start their Henko Trade account with 59 bucks or 49 bucks, and in a few days they made $480. So take advantage of the leverage, guys. It's amazing. But back to the trade. If you find that prices come to your area of interest, trail the stop loss. And if you don't know how to do it on your broker's platform, manually do it. If you see that your stop loss is way up here, guys, start moving it down. Look to the right. Look at the numbers. If it's 43,520, put 43,520. If it goes lower, put 43,460, right? You want to save the money. And so let's let this play. Price retest, respects the area, continues down. And that was a really amazing trading day. Of course, it went a little bit lower. It was shy of this area, started climbing back up. Of course, guys, you have to, try not to be too greedy, because my entry would eventually become a target as price started to climb back up as well. Remember, your entries are always going to become targets. And I just want to show you guys when it actually got taken out, which is right here. Luckily, I was out of the trade. And so that leaves us with where we stand next and what we can expect tomorrow. And it brings us back to the daily time frame. And let's clear some stuff out. Okay, so guys, of course, as you know, we have the previous day's low here. Let's highlight the previous day's low. Remember, we're in a discount. Well, price touched the discount area. We're possibly expecting a sweep and some bullishness. Maybe just a small retracement. This is that 1 hour time frame. We're still at the bottom. We're still at the bottom, which means that this is possibly a great area to take an opportunity. Okay, so price looks as though it came down and respected this area right down here. And it looks as though it's breaking structure and respecting areas as it goes up. So guys, what I'm looking for possibly for tomorrow, if it doesn't, run, is that we start breaking structure to the upside. Number one, we have some areas to target. We have that area of interest that I marked out today that we never got to. We have that one. That would be nice. If we could get up here and we could see if price wants to respect it, retest, go higher, this would be a retracement trade. I do feel as though we have, headed up for a little bit and then continuing down. We do have a higher area of interest right here. This area is unmitigated. This means we just kind of fell down and didn't get even 50% retracement even above this area. So it's really interesting to see what we do tomorrow. So guys, I want to go over some confirmations, right? If we're going to continue up, follow structure. You see how I waited for a break of structure, a liquidity sweep, a break of structure, a retest before I entered the trade? You want to do that no matter which direction you feel as though price is going in. Go with what you see, not with what you feel, right? If you see that price is breaking structure and is continuing to break structure to the upside, and you've done your homework on the higher time frame to make sure you're not running into any possible areas of reversal, because sometimes your order blocks are entries for you, but sometimes they actually could take price in a different direction, right? Especially like bearish OBs. If you're buying up to a bearish OB, it could absolutely push price down. So if you are seeing that price is breaking structures to the upside, guys, take a buy, right? You want to see a liquidity sweep where we do something like sweep liquidity, you know, like if we create a low, sweep liquidity, break structure, retest. You want to, you know, continue with the flow to the next area of interest or the next possible area of, you know, bearishness or anything like that. Simply put, if you find that price is breaking structures to the downside, take the opportunity to the downside. All in all, guys, I wish you an amazing trading day tomorrow, and I'll be back for another update.